You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 2722. Well, the common consensus is interest rates are heading higher and the stock market is heading lower and the world is ending. Well, maybe you tuned into the right place today because if my next guest is correct in his thesis, and you ignore the consensus, you ignore the media narrative, you might be able to just really cash in on being a contrarian. His name, you've heard him on the show before, is Avi Gilburt. And of course, his website is ElliottWaveTrader.net. Avi, welcome back.
Thank you so much for having me back.
So, the world's not ending?
Not yet. That's the thing they say, you can only prepare for one end of the world.
Yeah, that's the problem. I keep preparing and they keep putting it off. And then, well, put it this way, when you're right at the wrong time, you're still wrong, right?
Yep.
So what's happening here?
Well, I mean, but I'll take you a step back. Last year, I think when we spoke, I was looking for the market to rally up towards the 4,900 region from the 4,270 region pullback that we caught. And my ideal target was 4,882. We came up about 60 points short of that. And my expectation was we would go from there to at least the 4,400 region. It could be as deep as the 4,100 region. And as the market stands right now, it's really trying to decide whether the 4,222 bottom that we struck already is all we're going to get, or what I would rather prefer is one more drop for a lower low, maybe test that 4,100 region, and then begin our next major bullish trend. So, as I look out towards the second quarter of 2022, I think we're probably going to be in that next bullish trend by then.
All right. And I guess we won't know till we get there. What would make you change your opinion, Avi?
I mean, the probability of me changing my opinion based upon everything I'm seeing is approximately 10 to 20% at this point in time. I mean, you would actually have to break 3,700 for me to be questioning the potential for the next rally taking us to 5,500, which is my next ideal target.
All right, 5,500. That's a bridge. That's a pretty far. That is a far bridge.
About 1,000 points. About 1,000 points from where we are now.
Yeah, almost 25%.
Yeah, close to it. 20%. Yeah.
Interesting. And so, if the market's going up and it keeps going up, then a lot of things that the pundits are predicting just aren't going to happen, are they?
I mean, the pundits can predict whatever they want. Let them be smarter than me. I just want to be on the right side of the trend. That's all.
Yeah, well, and it could very well do that. But what I want to understand here is cycles, right? We're dealing with cycles. And if you watch the news and you think the end of the world is here or it's going to be here imminently, and we're going to have higher interest rates, high inflation to the moon, maybe hyperinflation, who knows? And yet, based on your numbers, could we have strong inflation and still see the stock market going up?
The answer is yes. I mean, we've seen that throughout history. Inflation, or when the Fed starts raising interest rates, that's not when the stock market tops out usually, when you look at it historically. But even more than that, I'm seeing the potential for rates to start coming down and not necessarily going up anymore. I think there's some potential that the Fed may be backtracking as we move through 2022.
And that means that they threw an inflationary party and nobody showed up?
I mean, there's still a lot of economists that are arguing that This could be a supply shock issue, not necessarily an inflation issue per se. But, when I look at the TLT, which really has been my guide, what it's telling me is as long as the TLT holds the 137, 138 region, I'm looking for, a multi-week to multi-month rally minimally. And depending on how that initial rally takes shape, it could turn out into a multi-year rally. So if bonds are about to potentially rally, if we hold this support and bonds are about to potentially rally, it's gonna tell the Fed, well, maybe you don't need 7 interest rate hikes. Maybe you don't need 5 interest rate hikes. Maybe you only do 1 or 2 this year. So I'm not so sure that the market is strongly suggesting that the Fed's going to follow through on its plans.
So if we get 100 basis point rise in rates, the market can take it?
I think so. I mean, based on what the market is showing me right now, market could take a lot. It's still going to 5,500 to me.
Well, if you're correct in your assessment, then we're probably going to see real estate maintain its value at the very least, or go up in value. Rates are going to stay low. That means affordability, such that it is going to kick in, and that higher wages mean that affordability isn't as much of a factor, is it?
Well, that from my opinion, that's only going to be for the next few years. I don't think that has a very strong lasting effect. And when people look at real estate, you're looking at, very, very long term when you're dealing with real estate. Not my expectation. My expectation is, real estate can get another bump for another couple of years. But I think at that point, it's done.
All right. Well, you know what John Maynard Keynes said, don't you?
Absolutely.
Right?
The market can remain irrational longer than you can remain solvent.
Not only that, but in the long run, we're all dead.
We're all dead. Yep. Absolutely.
So what do you think it means for gold? Gold staying in this channel that it's in for the next couple of years?
Don't just survive. Thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper-Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive. Now more than ever.
Gold is causing me a little bit of near-term angst. When I'm looking at the GLD chart specifically, as long as we hold below 172 on the GLD, I think this can project as deep as 140. So that's potentially a $300 drop in gold. Are we going to reach that maximum? I'm not sure yet, but I'm telling you the setup is in place for that to be seen. I'm not 100% sure yet we're going to get that deep, but as long as we hold below 172 on the GLD, the setup is in place.
So lower gold, huh? Wow.
Yeah.
Who would have thunk it? It just seems the inflation is real and prices are going up, producer prices, everything. But more importantly, wages are going up. And therefore, the wages, consumer prices could theoretically go down. Producer prices, commodities can go down. But once wages get increased, they don't go down, Avi.
But the problem that I have with this whole inflation argument, and the velocity of money has been sitting on the floor for years. And unless you actually have the velocity of money telling me that money is moving through the system, the inflation argument loses a lot in my eyes.
Mm-hmm. Yeah, well, but what about how expensive a Thanksgiving dinner was this year?
most of many economists can easily look at that and say, supply shock due to the COVID shutdowns. So there's a reasonable explanation for everything, but there's no reasonable explanation for having inflation and having the velocity of money sitting on the floor.
Yeah, well, but hey, maybe velocity isn't what it used to be.
I mean, isn't that what tells us if there's really money rolling through the system? And inflation tells us that, there's too much money sloshing through the system. Velocity of money is not saying that.
But on the other hand, we've got a lot more entities that used to not be considered banks that are considered banks now. American Express, Goldman Sachs, all the investment banks are now banks, so they get to print their own money too. And do you believe all the government numbers that get issued these days, like the employment numbers last week? I think there's a creative statistics department hidden someplace in the government.
This is where I let smarter minds than mine debate these issues. For me, it's nice to debate it. But at the end of the day, my primary goal is I want to remain on the right side of the market trend. And, none of that really changes the way I look at the market. My primary perspective is that market sentiment is what drives the overall market. And when the market gets too bearish, we go up. When it gets too bullish, we come down. And the market is really even at the lows at 42.22, we saw some bearish extremes where even the NASDAQ was as sold off based upon a number of technical indications as it was in March of 2020. And we know what happened then. And I'm expecting pretty much the same thing again.
Well, without the shutdowns, maybe it's possible. I don't know. Like you say, the reasons for it are very elusive, but the reality of it, we'll know very shortly. So you're thinking, because what about so goes January, so goes the year?
I don't view markets from a linear perspective. So, when somebody tells me, well, last year, January did this, okay, that's last year. I never buy into these commonly accepted perspectives because most of the time they're fallacies. So, look what happened. Was it last year in January? Was it last year in January we came down and then went up? I know it's happened over the last few years. We've come down in January and then ran straight up like a bat out of hell. I don't look at those things as really carrying much weight. To me, it's way too linear of a perspective in looking at a market that is nonlinear.
All right. Well, so what other markets? So we covered rates, we covered gold. What other markets you following here that we need to consider?
Well, I'm seeing that we're creating a larger degree topping in the dollar. I would like to see at least one more push higher on the dollar before we get a major topping in the dollar, and then I'm foreseeing what could be a multi-year decline in the dollar. Does that support everybody's inflationary perspective? Maybe, but like I said, I'm much more concerned in being on the right side of the trend than the names that people call it. So I'm looking at the dollar as topping out. Maybe over the next few months, and then I'm looking for a sizable decline in the U.S. dollar.
All right, so dollar top, and we looking at commodities at all? I'm looking for a sizable pullback to begin soon on oil, but man, this thing has been strong to the upside. It definitely has exceeded my expectations on this rally that I was looking for, but I think it potentially can have a sizable pullback. And nat gas, what are you seeing for nat gas?
I don't track nat gas. There's only so much I can personally track myself, but a lot of my analysts are looking for a sizable bottoming in it.
Well, we certainly did have some cold weather this past week, and we're not even through February yet, so it'll be interesting to see. There's a reason they call nat gas the widowmaker, right?
Absolutely.
All right. So best place to find you, ElliottWaveTrader.net.
That is correct, sir.
All right. And you can get a free subscription there so you can check it out. And you do live coaching and webinars too these days, Avi?
Absolutely. We do webinars 3 times a week for beginners. We have a beginner's blog because our interest is teaching people. And I personally do a live webinar to go through all my charts every Wednesday morning for an entire membership of 8,000. So, we are constantly trying to teach what we do.
All right. Well, that's a good thing. Anything that educates investors so that they can avoid making the same mistakes that I've made is a good thing. And hey, if you got a question for Avi, why don't you shoot me an email? The email address is kl@kerrylutz.com. Don't forget, go to the site, financialsurvivalnetwork.com. Get your free newsletter. Avi, always a pleasure, always thought-provoking, usually right. We'll see if you're going to be right this time, and we'll talk to you in a couple of months and follow up with you.
Thank you so much for having me again.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.